Well, honestly, I think we've done quite well so far in the last quarter, and we are also quite optimistic about the second half of the year. Why are we optimistic about the second half of the year? On the one hand, it's because we expect demand picking up, so overall automotive light vehicle production will pick up in the second half of the year. But we've also become more resilient in Continental, managing all the different effects that are out there at the moment.
Just on that subject, I mean, we are spending an awful lot of time talking about the impact of the energy crisis for Germany and continental Europe as a whole, the risks of slowing economic activity, and of course the continued impact of pressure from inflation on pricing and input costs. Your more upbeat tone seems somewhat at odds with that overall sentiment.
Well, in fact, Geoff, we've always said that we do expect quite significant headwinds coming from all these effects. In total, we're talking in Continental about potential 3.5 billion impact from the cost inflations or from the different inflations that are out there. And this is still exactly what we've put as a basis when we set out our guidance. Looking at our guidance, we do expect for the time being that we will have a stable energy supply in Germany for the rest of the year. If that should change, this might have an impact. But on the other hand, we are also getting ready and getting prepared to look at alternative supplies beyond gas at the moment for our plants.
Can I bring up the demand picture? We've already had increases from the ECB now. I was saying on camera just a moment ago that we've had major auto companies, CEOs tell us that they are concerned. They simply do not know what the impact of jumbo-sized increases could be on the demand picture. What could the spillover effect be for you if we do see consumers decide not to buy new cars at this stage?
Well, so far, what we've put down in our guidance, the 4 to 6% expected production volume increase throughout the year is still exactly what is in line with the expectations also from the IHS. So there we feel quite comfortable. We also see that with the relief in the semiconductor supply situation that we expect for the second half of the year, we don't see any reason to believe that this is not what is going to happen in the second half. We do see some drop in demand on the replacement side. We do expect potentially some drop on demand on the replacement side due to inflation, but that was also already factored into our guidance, and this is why we still confirm the guidance and are still positive about the development in the second half of the year.